I'm Stefan Walter. I'm managing partner of RSM Austria, which is an audit, tax, and advisory company and firm, and we are part of RSM International. I'm also serving as a board member of the International Board of Directors of RSM International and also chairman of RSM Europe. And we in Europe, we established quite recently a real estate group of all the experts within RSM coming together, sharing market intelligence, also approaching the market and hopefully coming back to you, to the market, to the people interested in our know-how and addressing the most pressing issues for you, and also trying to offer seamless service for all our clients all over Europe, and also expanding to other regions where we have experts in Asia, for example, and also in North America. So I'm very happy here to share a little bit of my experience, quite recent experience with investors. We have a strong presence in private equity as well as in private clients, so that's also quite interesting what they are currently looking for in real estate, and very happy to be here with you.
Great, thanks. Daniel.
Oh, hi, I'm Daniel Harris from CAIN International, and I run the European Investment Programme. So we're a business that is a US business and a European business. We have offices in London, New York, Los Angeles, and we really do three things. So we do real estate equity, real estate debt, and real estate private equity. So really buying operating companies that are real estate backed. We've invested about 5 billion over the last 4 or 5 years, and we're continuing to grow that program. Probably one of our most notable recent acquisitions was the Beverly Hills Hilton and Waldorf Astoria, and we bought some land associated with it. We're going to do a large mixed-use project there. And in Europe, we've invested, generally across the board so far.
Great, thank you. Andrew.
Good morning, Andrew Angeli, CBRE Global Investors. I head up our European strategy and research team. CBRE GI is the fund management arm of the US services company. I sit on our European Investment Committee and ultimately help steer the strategy of the broader business.
Great, Larry.
Hi, Larry Young, BNP Paribas Real Estate. I'm based in Paris. I've been there for 16 years. I run the International Investment Group, which is the cross-border investment team. So I have about 30 people based across the globe, including Asia and the Middle East. And we look to increase investment volumes for all the business lines at BNP Real Estate. I'm on the international board and happy to be present.
Great, Damian.
Hi, Damian Harrington, Head of Research for Colliers International across EMEA. Been with the company for 11 years, work with all the different business lines across the territory and increasingly with our global capital markets team. So we are 68 countries globally, over 17,000 people, and I think last year we did about 130 billion in transactions.
Great, thank you. So we've got a real mix of experience and lots to focus on. So Damian, let's maybe start with you. In terms of some of the biggest changes that you've seen in terms of capital flows, global flows, but also flows particularly coming into Europe?
In the last 12 months or just longer term?
Last 12 months, yeah.
Last 12 months. Well, I think the last 12 months it's been, obviously a lot of South Korean capital has been very active. Singaporean capital been very active. German capital has actually been most active. So it's actually intra-regional capital that's really driven the European market in the last 12 months. So if you look at net investment, it's definitely the Germans. American capital has started to come back on a net investment basis. They were divesting for a few years, but they're now moving back into the market and taking on a slightly different strategy, it seems, in terms of more value add, more opportunistic type of plays. So I think that's the capital coming in. In terms of what people are buying, there's clearly a big drive towards residential, towards hotel, hospitality. There's still a lot of money moving into your industrial logistics platforms, but that's kind of run its course. I think that's starting to peak, but yeah, I think generally they're the key themes. Retail has obviously got a bug, not just in Europe, but now globally it seems. So we track about 30 big global investors, and if you look even in the last 12 months, whilst they've still hold a lot of retail, they've started to divest out of retail as well. So I don't think it's as bad as it's often portrayed. If you take out shopping centres, there's actually been net investment into high street, into grocery, and into retail parks and warehouses, and I think they still have a strong story despite what I thought 5 or 10 years ago. But yeah, I'd say they're my key themes in terms of what I'm seeing.
Okay, good. And we'll drill down into some of those sectors as well and what people are doing. Andrew, just in terms of the looking at, you're obviously on the research side, so looking at the broader macro picture, there was obviously an expectation of interest rates beginning to tick up in the States, and now that's gone, and now we're looking at much lower for longer. In terms of the capital flows, by definition, does that mean we're going to have more what was, looking at bonds beginning to move into real estate? Do you think that's basically what's going to be happening from this point on?
Absolutely. I think the fundamental shift in our thinking over the last 6 to 9 months has been this reversal in monetary policy and how that translates to real estate capital markets. Increasingly, I'm hearing more and more about the denominator effect. Which is simply, a lot of investors have done well in their bond portfolios, now are underallocated to real estate. The go-forward view on the bond portfolio, not that attractive. Real estate wins in that scenario. So I expect further allocations to real estate over the coming years, with debt being so cheap and accretive to returns. To my mind, that suggests an even more competitive marketplace for core property in particular. And when we do our forecasting, again, the shift in monetary policy, a year ago we were expecting property yields to move out, call it 50, 60 basis points over the coming 5 years. Now we're in the range of 20 to 30, and that's a fundamental shift in the way we approach investing in the current market.
And Daniel, has that been your investment strategy? Is that adjusted slightly in terms of looking more at investment into real assets rather than the debt side? Has that been influenced by this bond yield, or is that something different?
Well, look, we're a value-add and opportunistic buyer, so we generally take debt on all the transactions we do. And I think, I've always had a belief that interest rates aren't going anywhere. You just can't see it. You look at the 10-year forecasts; they're all coming down. They've all been relatively low in Europe. Europe goes up, it comes down, it goes along a relatively bumpy road, but nothing's going to, I don't see, drive interest rates going forward. So I think it presents a good picture, for investing, over the next few years.
Okay, good. Stefan, you mentioned that you're on the international board, so you're also looking in terms of the client side at what the investors are doing. What's your sense of that, particularly in terms of international investors targeting Europe? Have you seen changes in that? We've obviously seen more Korean money coming in. What are you seeing?
Yeah, what we've seen quite recently is interesting from North America, picking up interest again. I think Canada, for example, is not only limited to the US. I think Canada is also, I would say, a very, very attractive from the investor side, as funds will flow into Europe from their side. Asia, of course, always interest from the Asian side. What I mentioned before is a little bit taking a view on the private equity and the private clients. I think they have been in the past, of course, very much interested in I think this is also the theme of this discussion, the winning cities in Europe that we thought we have been thinking of during the last years, but this is changing a little bit as other cities are also picking up beside these main hubs as Amsterdam, Frankfurt, Paris. Now it's coming up Spain, Madrid, Lisbon, for example, Greece. Austrian investors are very much interested in Greece currently. Maybe they are thinking that might be currently a very interesting opportunity, of course, as Greece is recovering quite well. But I would always advise my clients taking more the longer time perspective, and so I think you're still in a safe place if you're still investing in the main cities, in the main places in Europe. But I think it's worth looking also a little bit beside that, and maybe there are coming up opportunities in these other spots, as I mentioned before, in Spain, Portugal, and Greece, for example.
Okay, I'll dig down into the cities and the locations in a minute. Lara, just in terms of some of the emerging sources of capital, are you seeing new capital coming in? We've mentioned South Korea has obviously invested significantly into CEE, for example, and I noticed that Japanese capital had just bought in Poland in terms of the student housing side. What are you seeing that you think is kind of notable or new capital coming in?
I mean, you're right. You mentioned the South Koreans. They did almost 6 billion euros for the first half. So were one of the biggest investors in that time. But as you mentioned, you've also seen a lot of European investors since then. Singaporeans, we did a couple of deals with Capital Land, and they're sort of now in the market. And there's other Singaporeans kind of following the GIC story. New capital. I mean, Japan. We've seen them knocking on the door for a long time. What we're generally seeing is Japanese capital more going in on JVs, on limited amounts in deals. We're not seeing a huge amount in terms of buying deals at 100%. US, I think US is interesting because we're seeing new, or sort of North America, I'd say we're seeing new investors that we haven't seen before. Guys like Quadrial, for instance, who are big in Canada, now big in UK, now looking at continental Europe. So I'd say US, I'd say big investors in Europe have actually been the most active, and in Asia, as well as South Korea, Singapore, and Japan, I think we're still waiting.
And do you think, Damian, I mean, just to pick up that point on Japan, I mean, obviously Japan has been in a position for a long period of time where it's had very low interest rates over a longer period. Do you think that means, in a way, that actually Japanese capital is potentially now more comfortable investing in Europe because it's a similar market?
I think they should be. They've got more experience of what we're now facing. You know, they've had 10 plus years of that environment, so they should be more attuned to it, should be more comfortable with it. But you know, they tend to take their time coming into the market. Some of the big funds have got significant war chests, significant, but it's a long, slow play for them, it seems.
I'll just come back to the cities part, Daniel. In terms of your investment strategy, how are you choosing? I mean, what's your take on a winning city? What makes you want to invest in a specific city?
Look, so we, sorry, we are really focused on, you know, I think at the moment, you know, I was look at us now, you know, everyone talks about the term late cycle. You know, no one really knows what it means. It just means we're generally late in where our investment horizon. And I think, you know, when I look back at over the last cycle, which cities performed the strongest, which cities recovered well, they were generally those gateway and challenger cities. So you have a view, or my view now, is you can either go down chasing yield and go to those cities that are further and further out, or you can stick to the more capital and gateway cities. Now you might choose to be in Paris in France, or Madrid and Barcelona in Spain, or Warsaw, or Krakow, Amsterdam, all these sorts of places. But I don't want to go to these more secondary and tertiary cities. I think they present risks, because, you know, whenever the bump in the road comes, the cities that have the best dynamics in terms of GDP growth, population, education, they bounce back the quickest. And what you saw really in the last crisis was that those cities which were those secondary and tertiary cities, the yields bounced out and they've taken years and years to come back. And you're starting to see investors now going down that route of just chasing yield. And I think if we learn anything from the last cycle, it was chasing yield is not an investment strategy.
And from your point of view, Andrew, you're obviously in that research side. How do you see that? I mean, when you're looking at winning cities, you're being obviously driven presumably also by GDP, by urbanization, demographic trends driving those. But are you seeing that opportunity across a number of cities and also into secondary cities? Or is your really focus also, like Daniel, just on those key kind of gateway cities?
Right. So CBRE Global Investors over the past year has embarked on a winning cities project. Fully appreciate that a lot of our competitors have done a similar exercise, but the core of our study was to find cities that are economically resilient, cities that perform well through cycles, that when that inevitable recession hits, they fall less and they bounce back quicker. And size is certainly important in terms of attracting capital, in terms of attracting talent. That's increasingly a theme that we're all looking to. Innovation potential is also a big one, and interestingly, a lot of the CEE markets, Budapest and Prague in particular, which are smaller in nature and maybe peripheral in the minds of many, look really attractive from an innovation point of view. The other point to all of this is environmental preparedness and positive, proactive, progressive civic leadership. And again, those strengths may be demonstrated in smaller cities. So Copenhagen certainly stands out in that regard. Bristol in the UK are examples, smaller cities, but making the right steps for the future.
Okay, good. And Stefan, you mentioned the private client side and more of that high net worth sort of. Is that capital different, looking at different things to the institutional capital? Is that capital more prepared to go into some of these secondary locations that maybe Daniel's less keen on?
I think it's very much depending individually who is really leading that particular private equity fund and who is the person, and if that person, which I mentioned just before, some of these clients are very much interested in opportunities, and that's why I think the secondary cities come into play, and regions, as I mentioned before, Greece and maybe Portugal. But I think what really becomes more and more important as the younger generation plays a bigger role also in this sector is that climate resilience. I think what Andrew mentioned just before, I think where the talent is going to, and I think we have to look at the younger generation. What will be the attractive places where the young people want to work and live? And I think these cities must have an answer to these pressing issues coming up. And if you look at the people on the streets, the young people, they want answers and they want to feel themselves comfortable. I think it's climate resilience, but also safety. And they want to live in safe places, and that's why still that the main, let's say, hubs in Europe, as mentioned just before, still are very attractive from their perspective. I don't see that a big change in that. But also looking for some opportunities on the side, I would say some niche markets always attractive to private clients and private equities.
Okay, good. And just Larry, in terms of that, picking up that point about ESG, sustainability, livability, wellness, how much is that beginning to influence investors now at the moment, do you think, in terms of when they're looking at locations, at cities to invest?
I think significantly. No, I think I agree. And political stability, the pollution issues in a lot of the big cities, is a very important choice. And I think developers as well as investors are really going down the line of the newest green building, of looking at where the transport links are, looking at cities with big infrastructure projects as well. And I think we'll probably come on to that, but for me that's a massive driver, and the cities that are going to win are the ones who are ahead of the game on those big infrastructure projects, not just for transport but also for housing, and I think it's a very big. It is a big choice on the investors list.
Okay, good. And Damian, I know you've done research previously in terms of winning cities. What's the structure that you've used in order to judge that? And has that changed just because ESG has become a much bigger part of it? There's walkability, there's livability, there's wellness, there's all about attracting human capital.
I mean, primarily what we do is we look at the people side, the talent, the diversity of the economy, same things that Andrew's mentioned, governance. Increasingly, we're now looking for the new version at the changes in infrastructure, which is physical, transportation, and digital, and environmental. But it's primarily about the occupier drivers, talent pool, diversity of talent, the university catchment, the skills, the credibility of the universities within a catchment, as much as the governance side of things. But I think the environmental part is clearly becoming a bigger driver for pretty much all the big listed companies are signed up to ESG. A lot more investors in the UK recently signed up. So I think that's something that we're going to continue to see going forwards. And it's power is the other thing. We're in an increasingly digital world. The amount of power that we need, whether it's electric cars or data centers. I think something came out the other day, data centers will absorb 10% of the world's power in 10 years' time. That's a lot. So how you get data centers to work, I was chatting to somebody recently, set up a data center in Finland, and they actually take all the heat and energy and put it into the public heating system. So it's how you kind of get smart with things like that. And that's going to be a big driver going forwards.
Okay, good. Just Daniel, in terms of digging into some of the cities, in the discussion still yesterday, Brexit appearing a number of times. I've left it 25 minutes before bringing it up. But how are you seeing that in terms of risk when you're looking at different cities? How do you see London at the moment?
I don't know how long we've got really to talk about that. I suppose, look, Brexit's a tough one, right? I think it's been going on for way too long. There's no question, and I suppose the worst thing that I foresee from my view is that it just continues. I hope and pray that we have a solution in 3.5 weeks' time. I don't really know what that solution is going to be, but I hope we get one. I probably think we're not going to, and I think that makes investing in London a challenge. I mean, we are big investors in London. We have big projects. We are big residential developers. We have 2 big London schemes, but making an investment decision to invest in London is a challenge at the moment. You can't deny that it's not. But Brexit isn't the only political instability in the world. It's a big one on everyone's lips. But there's political instability in Spain, political instability in Poland, political instability in the US. So Brexit. So what I seem to think is that investors are investing in a climate where political instability doesn't matter so much. People are used to that bit of instability, and that instability also presents opportunities. London, as much as it is a challenge now to invest in, once Brexit is sorted out, I believe there will be a huge inflow into London. And those people that, London is a global city. It is one of the handful of true global cities. And the demand for just to live and work and invest in London is so big that once the Brexit issue gets resolved, I think London will shoot back up to the top of the investing and the investment horizon, and people will want to be there.
So, just picking up that point, I mean, Andrew, are there places where you would see political risk too much at the moment, where it's more difficult? I'm thinking particularly after Donald Trump's tweet yesterday that maybe Istanbul isn't your favourite option. Yeah. But how do you see that, or are you viewing London in the same way? What's the sort of house view on that risk side of things?
We remain incredibly positive on the London story right now. The challenge is convincing our investors to invest, to make the plunge into the market right now, given all of the uncertainty. But yet you have to take the long-term view, right? London is a winning city. It's a world-class city. It's where talent wants to be. It's where capital wants to be. The number one question I get when I'm talking to investors around the world is, when is the best time to get back into the market? And that question may have a different rationale, and that may be currency motivated. When is sterling going to move by 10% so I can see a buying opportunity, or when are we going to have Brexit clarity? I get that. But fundamentally, London is a great place to invest over the long term. It's generated returns in excess of Europe. Currently, the yield spread between an equivalent property and the city is 150 basis points wider than it is in Paris or the German cities. And the market right now is less competitive, right? Everyone's collectively freaked out about Brexit and not willing to deploy. That means it's a less competitive market, and that's something we absolutely want to make use of.
You're making me feel quite guilty about freaking out about Brexit. I mean, obviously, Larry, you're based in Paris, so it would be harsh to get you to talk too much about London. But obviously in Paris, we've got Grand Paris, we've got the Olympics coming up. What's the situation there? Does Paris see itself benefiting from this kind of hiatus in London at the moment? How do you see the prospects there?
I mean, I think Paris definitely tries to see itself as benefiting. The whole Gilets jaunes thing didn't help over the last few years, and the political situation is better, but I think there are a lot of, as you say, positives. I mean, the Grand Paris is less kind of talked about than Crossrail, but it's a 23 billion euro project. There's going to be almost 70 new stations between now and up to 2030. So that's a massive infrastructure project. And there's some areas that have already transformed. Like north of Paris, it used to be quite poor. There's some areas there that you go in and you look from the top of a building and the whole market has changed. And as you mentioned, the Olympics is going to be a big driver of that in 2024. Especially around the stadium, an area called Pleyel, where they're going to have the main Olympic village. So that will be no doubt very positive. I think the Paris or the French challenge is some of the social side, some of the tax side, some of these points that's not going to mean it is the one solution if, unfortunately, people do leave London. I think other cities across Europe have been and will carry on to benefit, but I don't always agree with Daniel what he says, but I did agree almost to everything that's just been said about London as well. All these international investors are more going, when are we going to go back in?
You're obviously not being dangerous enough, Daniel.
The problem is you never want to make a decision that you can be too easily criticised over. And everyone knows you've got to invest in London. It is a global city. But do you want to invest now, or do you want to wait 3 weeks to see if there's a solution? And if you get it right or get it wrong, you're still sort of getting it wrong, because why did you not wait 3 weeks? If you're really truly opportunistic and you had completely discretionary your own capital, why would you not invest in London for all the reasons you just talked about? It's less competitive, yields are 150 basis points higher than London, but it's just not that easy. It's just not that simple.
I mean, we get that completely right. If you get it right, you won't be thanked, and if you get it wrong, you'll never hear the end of it. So we fully appreciate that bit, and that's the difficult sales pitch to our investors.
I'd just say one thing actually I didn't agree with. Daniel, my parents live in London and lots of people live there, and they're all going, in 3 weeks, we just want a solution, and if necessary, we just want a hard Brexit. I don't agree with that bit. I would rather, I can see people looking back in 20 years going, well, if you'd waited another year and got a solution, that would have been a hell of a lot better than crashing out.
Yeah.
I didn't do that. Apart from that, I agree with the rest.
Oh, thank you very much.
Good. Enough Brexit woes. Damian, let's look at Germany. Federal system, not that much opportunity really to develop significant areas in most of the cities aside from Berlin. So does that mean Berlin is the investors?
I think there is an opportunity in pretty much all of them. Vacancy rates are 2%, 1.5% in some of these big German cities. So there's a lot of latent demand that's yet to be satisfied. So there's a big development play in pretty much every big German city.
But do you see Berlin as becoming a capital city like Paris, like London?
Yeah, I won't mention the airport, but I just did. But, once it gets the airport done, I mean, it is. It's becoming, it's the cultural capital, it's the innovation capital. It is rapidly becoming the capital of Germany. Yeah.
Okay, good. And Stefan, I know you've got that sort of international role, but you're also sat in Vienna. So you've probably got a better window also on the CEE side and what's happening there. As I mentioned before, you've seen a lot of Korean capital coming in, previously South African capital there. What are you seeing at the moment there? Because obviously there is potential for a number of those cities, and particularly we heard yesterday that the Polish cities, secondary cities, are developing. It's not just Warsaw, it's now the Polish secondary cities. What are you seeing in terms of investors looking at that market?
I think what was mentioned already a little bit earlier in this discussion is that currently, I think Czech Republic and Hungary seem to be the most attractive places currently, I would say, in this area, and especially in the Visegrad countries. Of course, my heart still is in Vienna, and I always try to sell my hometown as best as I can, and that, as you have seen, it's a perfect place to live in. The quality of life is exceptionally good, but that's not all of the story, and it's very much about where the talent is going to and where the people want to work. And I think so there's much to do in Vienna to become more successful with that, but we're picking up, and so we are a little bit jealous still about Berlin, because Berlin they made it really as best as they could. So all the young people, not all of them, but many young people are going to Berlin. That's why it became so attractive. But coming back to your question, I see currently Budapest, Prague, Czech Republic, and Hungary. They are doing extremely well. I think Warsaw was a little bit a shooting star a couple of years ago, so that might be maturing a little bit more than the others. But beside these places, currently, I would be very careful in investing in other places currently, as going more far east as Russia or also Romania. So you need really to understand the market Yeah.
Okay, good. Are there any questions or anything anybody wants to share? Any questions they've got for the panel? I'm counting down in my head 5 seconds whilst talking to give you... There is! Completely out of my line of vision, but I've found you.
I have a question because I work in the architecture field, and I work between London, Paris, and Rotterdam. And I see that more and more young people are coming to Rotterdam because it's kind of a center of Europe in a way. It's related to Scandinavia very easily, and also to London and Paris very easily. But I don't hear anybody talking about it, so I'm a bit surprised in a way, because there is many startups that are starting from Amsterdam to Rotterdam, and there is also Dublin, which is a major city of development at the moment. But why is it not mentioned?
Well, thankfully you have mentioned it. It's great. Well, let's pick that point up, because I do think it's interesting. The Dutch cities, and especially in terms of attracting talent and innovation, a lot of the universities teaching courses in English, for example. So let's pick up that point about some of those other cities, Dutch cities, but also Dublin. Anybody can take a view.
I mean, maybe just one word on the Netherlands in general. I think last year, in terms of investment volumes, it was the 4th biggest market with almost 20 billion euros. And this year's going to be a bit less, but it's still going to be a very large investment market. So that, in terms of investors' appetite, it's extremely strong. And I'd say mainly Amsterdam, but also the 2 other big cities as well. And in terms of occupiers, you know, we're certainly seeing a lot of the IT startups going there. So it's, I'd say, very much on the investor appetite for continental Europe.
So the Netherlands for us is one of the most important markets for CBRE global investors globally. We're invested across funds in the market, on behalf of separate accounts, quite active in the market. The city that I'd like to mention is actually Utrecht, which is featured favorably in our forecast for the last few years. There's major infrastructure investment going in with the redevelopment of the central station, redevelopment of the adjoining shopping center as well. It's vibrant. It's cheaper to live in than in Amsterdam. It's easy to get around the country. There's a really a positive story there.
Okay, good.
Yeah, and we're a big investor in Dublin. So we're developing a large, just under 40,000 square metre office building in the North Docks. You know, and we're very positive on the market. You know, Dublin's gone through a significant investment boom in terms of capital flows, investor demand, and the tenant demand. You know, you're seeing huge uptake from the IT companies. You know, part of it is a result of Brexit. You know, I'll go back to that. But generally, the market is very, very dynamic, and we're a big believer in Dublin, and that's why we're developing there at the moment.
And maybe, Damian, just pick up any of those points, but also you were based for a long period of time in the Nordics, so it might be worth also picking up that aspect.
Yeah, I mean, if you look at investor momentum, sort of over the last 12 months relative to the last 5 years, Helsinki's up there, Lisbon's up there, Madrid, Warsaw. A lot of the other markets are pretty much at a level, and some of them are below. So it does suggest that we are late cycle, whatever that is, we're peaking. But if you look over longer periods, you know, we've got 4 super regions in Europe, which is London, Paris, Holland Metropole, which Rotterdam is very much a part of. Utrecht is definitely an interesting market. There's a lot of occupier outspill from Amsterdam that's moving to Utrecht, and the whole place is seriously well connected by rail. And then the other one is the Rhine-Ruhr. So, you know, we also look at big regions and how those cities glue together to form a region or dominate a region, such as London and Paris. But I think Lisbon's the other one that's quite interesting. It's seen a lot of capital moving in, particularly into retail, and that's still got an awful lot of momentum. But
yeah, and Lisbon especially. Actually, I mean, it came top of the ULI Trends PwC Trends list at the beginning of the year. I was at chairing the second day of the Portuguese Real Estate Summit in Estoril last week, and there I think it was 40% more people attended that, and the majority of that 40% was international investors looking at Portugal, and particularly looking at that. And interestingly, we had a session on Porto here yesterday. In fact, I can see a couple of still Porto bags. If anybody wants to learn more about the market, I've just seen them over there. But for sure, I think that's an interesting market as well, that kind of Spain-Portugal side. Very good. Right, I've got a last question to finish up on, which is bearing in mind all of that and the shameless plug for Vienna. Where, out of all of these things, what's the analysis therefore telling us about where we should invest? You can either choose sectors, asset types, cities. What do you think is likely to outperform?
Yeah, everybody of us is getting older, and that's why maybe Vienna is a nice place to invest in and to stay there. But honestly speaking, I would say cities. I really would take a deep look into where the young people are heading for and talent is going to, and I think that seems for me the most interesting part of this research and analysis. So I think it was mentioned before that infrastructure, transport. So we are now moving away a little bit from big airports to a good railroad system and accessibility with regards of train services. So there are some trends in place, and I would really have a look at that. So that is, for me personally, the most interesting part of this analysis, beside I would say sectors and diversification in where to invest in. I would say the geographical part seems to me the most interesting.
Great, Daniel.
Yeah, look, I think you've really just got to continue to focus on macro fundamentals, right? If you want to try and outperform the market, try and look for those economies that are going to outperform the average. So, so you look around some of the peripheral countries. So we've invested in Central Europe, like Spain and Poland and Hungary. We're looking in Iberia, in Spain, looking in Ireland, and then you've got to backfill that with what are the strongest core cities in Europe, and that is London. Once the issues get sorted out, Paris, some of the German cities, the Netherlands, and as long as you focus on those key gateway cities, and you have the positive fundamentals underpinning them, I think you generally are onto a good strategy, and that's generally where I think we're trying to focus.
Okay, great. Andrew.
Yeah, at a time when cyclical growth opportunities are waning, we more than ever want to focus on enduring structural trends. For us, that's winning cities. Where does talent want to be? If you can find that, figure that out, capital will follow.
Okay. Larry.
Well, I'll try and select maybe just one or two, as we sort of mentioned, a number of cities. I think the Polish story is interesting. You mentioned it before, but GDP growth is over 3%. I was in Warsaw recently, and I hadn't been there for 4 or 5 years, and it's changed massively, and they've done it really well as well, and they've put the infrastructure in too. So I'd say Warsaw's interesting. And then I guess London, I'd say, look, the pricing has crept out while other pricing has come in. There should be, for especially value-add investors, time to go in and make some very good money when things get sorted out.
Okay, good, Damian.
And I think the UK is the most mispriced market in Europe by quite a long way, especially when you look at double net, taking out all the costs and non-recoverables into account. So I'd go UK, I'd go retail parks, major UK cities. A bit of a random one. There's nobody else. There's actually a few investors who are now seriously looking at it. So I'd actually make a play at ones that could work, where you can maybe combine it with some logistics.